Growth and complexity define Robinsons Retail Holdings Incorporated as it prepares to exit the Philippine Stock Exchange. Operationally, RRHI's retail engine remains healthy, with consolidated net sales rising by over 10% in the first quarter. Core net income climbed by more than 6%, demonstrating that RRHI's stores, supermarkets, drugstores, specialty retail, continue to deliver value and resilience in a competitive market. Beneath the strong surface, net income attributable to equity holders fell sharply, dragged down by increased interest expenses, investment volatility, and deeper losses from associates. Higher debt, tied to acquisitions and the DFI share buyback, pushed RRHI's financing costs up by more than 30%, diluting the impact of operational successes. RRHI's biggest formats, food and drugstores, are steady pillars. Supermarket sales grew robustly, supported by consumer demand and positive basket trends. Drugstores expanded as well, offsetting elevated operating expenses with solid top-line growth. Together, these segments reinforce RRHI's role as a defensive retailer focused on essentials. Challenges persist. Department stores and specialty shops posted weaker profitability, and operating costs almost matched revenue growth group-wide. The DFI buyback marked a structural shift. RRHI reduced its public float and paved the way for delisting, but this brought a higher debt load and weaker reported profit. Investment exposure in BPI adds complexity. Fair value losses in RRHI's equity portfolio pulled total comprehensive income deeply negative, with market-driven swings now influencing the balance sheet. Despite earnings volatility, RRHI's operating cash flow rebounded significantly, shifting from a prior outflow to robust positive generation in the first quarter. Much of this cash goes to debt servicing, lease payments, and capital expenditures, which limits overall liquidity. As RRHI approaches its July delisting, the board's tender offer at 48.30 pesos per share frames the final exit question for minority stakeholders. The essential business is not broken. Sales are growing, core profit is up, and cash flow has recovered. But the public market earnings story is clouded by leverage and investment volatility. For the Gokongwei Group, taking RRHI private may simplify the next phase. For investors, the decision rests on balancing the value of a healthy retail platform against the challenges and uncertainties of its final listed chapter. RRHI stands at a crossroads: operational confidence, financial complexity, and a carefully considered exit. Each shareholder must decide what that balance is truly worth.